Welcome to our overview of Global Fintech Innovations 2025, where we'll explore how technology, regulation, and new business models are reshaping financial services worldwide. Over the next slides, we'll cover key trends, real-world case studies, and practical implications for banks, fintechs, and policymakers, with a focus on how these shifts create new opportunities and risks for customers and institutions alike. This slide highlights 5 converging forces driving fintech innovation: ubiquitous smartphones, open banking regulation, abundant data, AI analytics, and growing consumer demand for friction-free experiences. Together, these forces lower entry barriers, compress transaction times, and push incumbents toward platform models, creating both competitive pressure and huge opportunities for new services that meet users where they already are. Here we look at AI applied to core banking workflows, using Citi's advisor insights and ML-driven microlending as examples. AI surfaces next best actions for advisors, automates microloan pricing to reduce defaults and speeds, processing, and ultimately turns predictive intelligence into a balance sheet asset that supports growth, frees staff for complex tasks, and drives measurable operational value. This page shows how real-time data streams feed a contextual engine to deliver adaptive dashboards, personalized nudges, and timely credit offers that align with users' cash flow cycles. Firms report revenue lifts from contextual recommendations and lower churn from improved engagement, illustrating how timely, tailored interactions convert raw streaming data into measurable business outcomes and better customer experiences. PSD2 and open banking have moved beyond compliance into a strategic asset by exposing secure APIs to third-party providers like budgeting tools, lending platforms, and investment services. With roughly 1 in 3 UK adults already sharing data, firms that leverage these flows can turn regulatory mandates into competitive advantage through data-driven innovation and new customer propositions. Embedded finance is erasing the line between commerce and banking by integrating payments, cards, and loans directly into ride-hailing, retail, and SaaS workflows. The slide's case study shows Global Rails funding African SMEs through point-of-sale software, demonstrating how embedding financial services into customer journeys can expand access and create seamless commerce to credit pathways. This slide outlines the shift from crypto speculation toward tokenized deposits, with JPM Coin as a case study using a Coinbase base for intraday liquidity and programmable settlement. Tokenized deposits focus on real-world asset integration and offer 24/7 liquidity and faster settlement, while regulators increasingly view distributed ledger tech as neutral infrastructure that enables scalable, compliant innovation. Smart contract innovation brings self-executing agreements with embedded KYC, AML, and tax rules, enabling on-chain integration and instant reconciliation. Pilots show a roughly 40% drop in settlement exceptions and lower post-trade costs, while immutable, time-stamped audit trails improve transparency and make automated workflows both more efficient and easier to verify for auditors and regulators. In emerging markets, agent networks are driving financial inclusion by registering millions of local agents who deliver cash-in, cash-out, microinsurance, and lower-cost services than ATMs. The Malaysia case study shows community access rising dramatically over 5 years, with mom-and-pop stores acting as licensed digital touchpoints that bring basic banking services to previously underserved populations. Winning market share in 2025 depends on intuitive onboarding and inclusive design. From frictionless biometric logins to multilingual voice bots, reducing drop-off with clear interfaces and accessibility features attracts diverse segments like seniors, gig workers, and rural women, turning usability into a strategic advantage that builds trust, lowers acquisition costs, and expands the addressable market. RegTech platforms automate compliance by converting AML, GDPR, and PCI inputs into automated code with continuous monitoring, enabling real-time suspicious transaction flagging and ongoing compliance checks. The business outcomes are significant. Firms report compliance costs cut by roughly half and faster license approvals in new markets. showing how automation can turn regulation from a burden into an operational multiplier. Security and compliance are now competitive differentiators, with over half of firms citing tension between the two. Embedded trust solutions like AI fraud detection, hardware-rooted biometrics, and zero-trust architectures provide continuous verification and device-level security. When integrated well, these measures reassure partners, reduce regulatory friction, and become a marketing edge that builds customer trust. The next horizon unifies ESG scoring, real-time cross-border payments, and cloud-native cores to create more sustainable and efficient finance. The NatWest and AWS example shows how multi-year pacts and unified data lakes enable carbon accounting wallets and instant FX for SMEs, demonstrating how cloud infrastructure and data integration unlock new product capabilities while supporting sustainability goals. In conclusion, building a fairer financial ecosystem requires interoperable, inclusive, and sustainable infrastructure supported by founders, regulators, and investors. By prioritizing faster payments, open rails, and broad access, the industry can deliver equitable financial services worldwide, but this depends on global collaboration to ensure the next decade expands opportunity and trust for everyone.